And we're live. Welcome to the webinar, everybody. And today, Libs and I are going to go through your trading problems. We've got some nice answers on our tweets, and I collected all these tweets and I put them in a presentation. So basically, in the next hour, we're going to go over them and discuss what we think of the tweets and how we solve these problems for ourselves or have some advice on how to solve them for you. But before we start, here's a message from our sponsors.
PrimeXBT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, Forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on PrimeXBT in minutes.
Birb Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit thebirbnest.com/Birb. Globe is an upcoming crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts. Sign up for early rewards at thebirbnest.com/Globe. Radix is the first Layer 1 protocol built specifically to serve DeFi. More information at thebirbnest.com/Radix. YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDAI.
All right.
Hey. Yeah, let's go for this. And I want to remind everybody that we do a giveaway every webinar, and in this webinar's giveaway, we give away 1 month of the BirbicatorPRO subscription. So keep an eye on the screen and try to find the secret code. And make sure you also hit the like and subscribe button so you get updated with every new webinar. Are you ready?
And of course, yeah, I'm ready. And of course, if you have any, we're going to go through a couple of questions that we have in the, on Twitter. But if you have any questions in right now in the chats, just feel free to ask them in the chat, and we will cover them if we have time as well.
Okay, let's go to the first one. And in this tweet, Jasowski asks us, all my capital is most of the time exposed on spot for positional or swing trading. As you have time to focus on trading, do you suggest me to reallocate a part of it to scalp or day trade? If yes, what percentage do you suggest? Or other strategy suggestions are welcome.
Yeah, this is a good one. In terms of percentage, I'm not really sure, but I think, when taking a decision here, I think you have to first ask yourself how much, how big of a capital do I need to have to actually make money on the day trading, and how big of a capital do I need to have to actually profitably do my swing trading. And something you have to think about there is you can't have a certain amount of capital for swing trading if you can only enter one swing trade at a time, if that makes sense. So you need to you need to understand how much money do you need, and I'd say somewhere between 10 and 20% for day trading. Kind of makes sense for me, I think.
Yeah, you don't want to have a too big of a bag because it can be really risky. There might be bigger drawdowns, and you wouldn't want your long-term holdings to suffer from that. But I think I also have another suggestion that if you start, it should be much lower. Do it with a little bit, very small bag until you're confident. Or if you start to build up, even with that small amount, you will be also more profitable when you are trading a bigger portion of your capital. So I think starting small is what I would suggest here, and never go above that 10 or 20% when you feel confident trading, I think.
Yeah, exactly. And I think, it doesn't really matter if you're trading with $1,000 or $1 million. I do believe that you should be, trading the same way. Obviously there's going to be some differences, but if you have a winning trading system, it doesn't matter what the the value of your capital or your portfolio is, you're only going to be watching the P&L in percentages and the stop loss and loss and wins in percentages. So start small, and the way I do it is I have my day trading portfolio, and for every winning month I add capital to that portfolio, because with every winning month it tells me that my system is still a profitable system. And if my day trading becomes more profitable than my swing trading in terms of percentages, it makes no sense for me to have a smaller day trading portfolio, because that's where I make the money. That makes sense.
Yeah, I think it does. But, as always, track your win rates, track your trades, and see if it's profitable enough. Okay, let's go to the next one. Andre K has problems with entering too early. Immediately after the announcement, probably he means our calls in the Birb Nest, without waiting for the pullback or without proper calculation of the RR. You guys can help by adding to your trades the risk-reward ratio, especially as you have multiple TPs. So it's also a tip here for us. But I think I want to focus on entering too early, because entering too early is often a problem. I think when we do calls in the Birb Nest, members tend to just push the green button and go in, while actually we have a buy zone, which is often within the normal volatility that you can use to set some orders and get them filled. So, just stacking orders below price doesn't only make it that you get a better entry, but also removes that market buying, which reduces some fees. Any other tips you have?
Yeah, I think what he means here, what he could mean here is, also sometimes we're posting calls where we're saying stuff like, the best entry or the highest probability entry is if this level gets reclaimed, like a break and retest, or if we have like a 4-hour candle closing above, or something that basically confirms the setup. And in some cases, I think it's important to also wait for some type of confirmation if we specifically talk about confirmation in the call. But definitely the buy zone is, you're not supposed to, on most setups, you're not supposed to just go all in as soon as we post a call. You're supposed to actually look at the setup and ask yourself, does this make sense from my point of view, and then try to enter where you feel like it makes most sense also, and not just ape in as soon as you see the notification in Discord.
Yeah, that's why we always add some explanation on what to look for and what indicators we're using, what they're telling us, so you have a better idea of that. Okay.
All right, so I see Donald Dump is here, so I'm gonna take this sippy cup sip for him in name of Trump. Dump. All right.
Welcome in the chats. Okay, next one. Hi guys. Spotting trend reversals remains an issue here. Also, one additional question. When you see a market reversal, do you place your orders in TradingView, or do you switch over to Prime XBT, for instance? I think as a trend trader myself, the trend reverses when it starts to break down moving averages or breaks down the last low. So basically, I think the answer here is just move your stop loss up at logical levels, which is swing lows or some below some moving averages, that once trend really reverses, you'll be automatically stopped out. Another suggestion I could do is, if you see some bigger divergences coming in, like 4-hour bearish divergences, maybe at an RSI, you can already take a little bit of profit, but never fully exit, because especially in these markets, coins can keep pumping. So you want like both, the best of both worlds, taking some profit and just moving stops up in case it runs further.
Yeah, definitely. And on the question of spotting trend reversals, the way I do it is I don't really try to predict a reversal. I try to wait for signs of a reversal, and actually if for example, if we're in a bull trend and I want to short that, I'm going to wait for pretty clear signs of a reversal. And if you're trading inside a range or whatever, a high time frame range, and you're looking for a reversal at range highs on maybe the 1 hour or the 4 hour, you could look for maybe a 4 hour bearish engulfing at resistance, and inside that bearish engulfing you could have a 15-minute or 1 hour bearish market structure that kind of tells you that we have now hit resistance and we're seeing some signs of a reversal on the lower time frames. And that is, if it is a reversal, that is going to translate over to the higher time frames. But a trend is really all about higher highs and higher lows, or lower lows and lower highs. So just like Abe just said, if you want to be safe in that trend that you're trading, just look at the higher highs and higher lows, or vice versa, depending if it's a bull trend or a bear trend.
Yeah, I think that's a good thing to keep an eye on here. And also, the second question: do you place your orders in TradingView, or do you switch over to Prime XP, or your exchange of choice? Like personally, I always place my orders in the exchange directly, but as long as you put your orders, and I think I mostly have all my orders ready, like take profits and stop losses in the exchange when I enter the trade, so I don't have to worry that much. Or if I see some really bearish stuff, or and just want to close a position, I go directly to the exchange and then close it.
Yeah, so usually what I do when swing trading altcoins, I use 3 commas for that. I think it's great. When I do most of my forex trading right now on Prime XPT, but before I did some trading on Oanda, and Oanda is actually integrated into TradingView, and for me that was really, really good, because I could use to manage all my positions directly in TradingView. But it's obviously like it's not possible for Binance and that kind of stuff. So you will need to have to do your analysis on TradingView and do all of your actual trading on the exchange.
I actually put this one in. I know it was a joke, but I think it's also good to discuss a little bit, where does your trading money come from, and how much should you invest, or how much should you trade with from your personal capital? How do you solve that?
Well, so yeah, I kind of, like I said before, with every winning month, I add funds to the account. So I'd like to see not only my P&L grow and my profit grow, but I'd also like to add more capital to a winning strategy, because if it's winning and it keeps on winning, I'm just going to be adding more. And usually what I do is I take a portion of my monthly income and put that aside for that trading, investing in that trading system, if that makes sense.
Yeah, I think I used to do the same, where during like the bear market, I just dollar cost average it in, where a small portion from my income would go towards some Bitcoin or Ethereum, and I think that could still be a valid strategy at this type of the cycle. part of the cycle. But you need to pick your investments a little bit better, and you also need to be more aware where to exit or where your stop loss for your longer term backs is.
I think I have something I have to note here is I'm not buying Bitcoin or Ethereum, right? I haven't bought any Bitcoin or Ethereum, this whole year, right? So what I do is I take fiat and add fiat to my day trading portfolio. I'm not going to be adding any fiat to my crypto trading portfolio because that has grown so much this year that I have no reason to be adding or buying more Bitcoin with fiat. It's only the day trading portfolio that I keep adding consistently, because that's actually part of my I guess trading strategy.
Yeah, and I think you're basically investing in your own fund where you know your performance and know how profitable it is. So
exactly. So if I instead of having money on a savings account where I will lose value, I instead put that money into my day trading account where I know I will make 5 to 10% every month, instead of just having it on my bank account where it's just going to lose value most likely.
Yeah, I think that's a good strategy. Especially, I saw a tweet that inflation was underestimated by some governments, which, of course, isn't weird that there is a lot of inflation going on if you put the money printer on. But definitely, money in the bank is getting worth less, and if you can counter that, or even outperform inflation by trading and investing, I think you should do it. This question from Billy Boy: trades are not winning, end up in a break even or small loss. Well, that can be a problem for a lot of newer traders. And I think it's all about setup selection, of course, and knowing you have some strategies. But I think the tip I want to give is, if your trade is ending at break even or small loss, that means that your stop loss placement should be somewhere else. So some tips people often give is, look where you get stopped out and let that be your entry, for example. Or maybe you're moving your stop loss up too quick, and you get stopped out while the price runs up without you. So I think most of this could be solved by trying to find a more optimal entry, and especially by analyzing where you get stopped out and where price reverses, and then look for signals or indicators that you can combine for a better entry, and thus have a stop loss that is acceptable, but also protected from volatility.
Yeah, I think that's some great points. I also think that if you're writing this and you think that most of your trades are not winning and they're mostly break even or small loss, if you write this without actually having the statistics and the proof to back it up, you should start to gather some statistics and do some journaling. Just if because you need to make sure that is actually a problem, because sometimes you have to, like, if you get stopped out at entry or you get stopped out at break even, that's obviously not going to be fun, but it's going to save you if price reverses in the other direction. So if you go back to those trades in a week and you see that, well, actually I got stopped out in the exactly right time, well, that's obviously then you're doing something good, right? But if if most of the trades get stopped out and then reverses in the other direction, so the loss would have been a big winner if you would not get stopped out. The solution is very, very easy. You use a wider stop loss, right? So that was one of my biggest problems in the beginning, where I price always hit my stop loss and then it reversed and hit TP, like on so many setups. So I used took a pen and paper and I noted down that if you think the stop loss is in a good position, lower it even more and then lower it some more. And that solved the problem for me. And the thing was that I was looking for, 6 to 7 R winners, but with lowering my stop loss, I put the average R at around 3 to 4, which is more realistic. So I think you have to do some analysis, do some journaling to see what's actually going on with the trades and develop a plan to solve it, basically.
It's a never-ending process of optimizing your strategies, basically.
Yeah, absolutely. And like you said, I mean, you could lower your stop loss, or you could look at all your setups and say like, well, I'm getting stopped out here, so maybe I should just enter here.
Yeah. I realized that in this bull run where some of my trend trading strategies first got shaken out and then continued to trend up. And then I created the second strategy where I could find the optimal moments for, where I would get stopped out, but that was then my entry. And from there, I greatly improved my trading during this bull market. So always monitor your strategies. I put this question in on which time frame is the fib used best, and the second question is where should I put the fib? Different fractalities doesn't matter all at the time to know if one is better than the other, but I want to refer Small Wound and Tito Philo to your webinar. Because you did a webinar last week on where to place Fibonacci's and how to place them and how to trade with them. So maybe we can put that one in the chats. And
yeah, let's see if I can find that one. Definitely, I think you in that Fibonacci webinar, you will see how I use the fib and will most likely answer most of the basic questions about the fib tool.
Yeah. Okay. Great. Next one. Do you guys keep a journal of your trades, like on Excel, for example? I'm looking to make one. Do you have a template? Thank you. And I think you're the best one to answer this.
Yeah, so I sent you a template the other day that I used in the beginning when I started trading. I'm not sure if you want to share that one or what the plan is with that one, but I am also using a journaling software called Edgewonk. So that's a paid one, which I do really like and really recommend. There's also some other ones like TradeSync or TraderSync or stuff like that. But I like Edgewonk. I've been supporting Edgewonk for many years, and they've just released a new version, and I do like that one. And I definitely recommend you guys use a trading journal. This is so important. When you're a veteran trader, you have a system that you've been trading for years, maybe you're swing trading and you know your system in and out, you know your win rate, your average R. Maybe it's not 100% necessary to have a journal, but if you're actually new and starting out, you need a journal. That's like no question about it. If you're going to develop a trading system, you need to know your average win rate, like at least your average win rate, your the size of your losses and your winners, and your average risk to reward ratio, because without that you really have no idea what to expect. And if you don't have you don't know what to expect, you can't really be confident in your system, and it's just pretty impossible to develop a trading system if you can't look at the winners and the losers. So you look at your winners and you ask yourself, what went right? What did I do good here? And you look at your losers and you ask yourself, what went wrong and what did I do bad here? So you take all of these lessons. Let's say, for example, you do a weekly journaling review where every Sunday you're going to go through the whole week's trades. could be weekly or monthly, doesn't really matter. And you take a pen and paper or whatever, and you write down lessons. So this week I've done this bad and this good. You're going to not do the bad things next week and only do the good things next week. And that's how you develop a system. And if the win rate goes up, if the average R goes up or stays the same, you know that you are on the right track. Without the journal, without any tool to gather the statistics, you're never going to be profitable. That's just fact.
Okay, yeah, I think that's the perfect answer. That's why I let you answer this one, because I know you're very vocal on this topic. So nothing to add. Next question. I have a hard time defining TPs and how much percentage of the position to sell. Also, when does the support count as tested? Well, let's start with the first one. I have a hard time defining TPs and how much percentage of the position to sell. I think that one is often the most easy part of my trading and picking setups.
I agree.
Because I'll just draw in resistances, for example, if there are resistances above, which we don't always have in a bull market, or I use some Fibonacci extensions and I place them at logical levels in this extension or at these just below these resistances, and then I take profit there as long as the risk reward is good, of course. And if it isn't too far away, so it's likely to get hit. And how much percentage depends a little bit on the strategy. Some strategies I take more off at lower levels. Some I take equally off at every level. So if you have 4 TPs, 25 at each TP. If you have 3 TPs, 33% at each TP. But it's mostly resistances, whether it's in the form of previous horizontal resistances or maybe supports when shorting, and Fibonacci levels.
Yeah, I think, like I said, taking profits is probably the easiest part, because if you have resistances, just take profit at resistance, like the next resistance above, because every resistance is a potential reversal point. And when trading in a bull market into new highs, or at least there's no highs. Maybe the closest resistance was a bounce that happened like 3 years ago or something like that. You might want to look at using the Fibonacci tool, the fib. Look at fib extensions. What I do for my my day trading strategy is I take profits at the 0% fib, the minus 0.236, and then the minus 0.618, and I take usually 25, and 50% as 3 TPs. But if in the crypto market, if everything's very bullish, I take 25, 25, 25, and then I leave 25% open for higher prices, and I'm just going to trail my stop up, because you never know how far up it's going, basically.
Yeah, that's I do something similar there. Also, when does the support count as tested? Because depending on the time frame, support might be tested on the 1 hour, but not yet on the 4 hour, because the candle did not close yet. I think there are.
Yeah, go ahead.
It depends, of course, on the chart and the setup, but what I often see is, especially on breakout levels, is that first, when a chart breaks out, it retests. Maybe I can see something here. It retests the level first on a 1 hour, then has a run up, and often retests it on a on the 4 hour. So let's see if I can find an example here. Yes, I can find an example over here where well, this is not really a breakout. This is a noisy chart.
I hate it when you try to find examples.
Directly, yeah, on the spot. Like this is a good one where it breaks out first. Just imagine this is one like the 1 hour chart and this the 4 hour chart, but I think this one works for the 4 hour and this for the daily. So as you can see here, over here, price breaks out and retests it on a 4 hour time frame, but eventually after a longer period, it retests it on a higher time frame. So if we switch to the daily chart again, we can see that on that daily chart, this level over here, yeah, good one. It didn't. Visibility in days, it didn't retest it on a daily level, but then on this wick, it retested it again. And this is what you often see also on the 1 hour time frame and 4 hour time frame, that the first 1 hour retest leads to an initial move up, but later it gets retested again, and you can also enter back on a higher time frame. So that's basically as long as it's retested, with a wick is often good, or maybe with a red candle and 1 or 2 green candles afterwards for some confirmation. I think that's how I look for support and how it's being tested.
Yeah, so I actually did a webinar. I think it was on Monday on horizontal level, how to draw them and trade them, and using the break and retest strategy. And I think I showed in detail what I view as a successful retest, because I'm not really sure if the question is on, maybe he's talking about the fact that you have a 4 hour candle breaking out.
Yeah.
But that 4 hour candle hasn't closed above resistance, but there has been a retest on like the 15-minute or the hourly. So you might have a retest of a level inside what could be a 4 hour fake out. So in that case, if that's the case, I guess you need to just choose what time frame you are going to use as confirmation of a breakout. And in my case, it's the 4 hour. So I look for a 4 hour open and close above a level to confirm it broken. And then for a retest, I mean, a retest is just when price hits a level. Now, the difference is it a confirmed bounce? Is it even a bounce or just a retest? Because a retest could be just price going straight through the level as well. At some point going through the level, it's going to be a retest. And so I think it's important to understand how a confirmed retest or confirmed bounce actually looks like. And you can use multi-time frame analysis to determine if it's a good bounce or not. But I definitely recommend checking out the horizontal support and resistance webinar from Monday on that.
Yeah, good advice there. This is a question I also often ask myself. How does a trader turn 1K to 100K? What's the secret or skill of this? Can a 2% risk management strategy achieve this? Well, you see these examples, of course, a lot on Twitter. And I think one thing to be aware of is that it's often maybe one account. They mention, like, I traded this account from 1K to 100K, which of course means that you can be much more you can do much more risky trades, because even if you blow out a small account, you still have all of your trading capital, and you don't really know what other trading capital somebody has. So you can use more leverage, you can use more risk. Another way to do it is to be really good at low time frame trades, I think. Just pick a good scalping strategy and keep compounding. But you always have the risk of being, blown out or having huge drawdowns if you keep doing that. And that's I think that's also what people forget, is how much time is needed to turn such an account into a big account. So that's why I mentioned scalping, because you can do it a little bit faster, but it's also more risky and you really need to have the skill. But you can also turn 1K into 100K in the traditional markets if you maybe can invest for 50 or 100 years. So it's also about time and trying to find the good time cost opportunities.
Yeah, I think I think also something important here is you will see people that have been trading for many years, and they have a clearly defined trading system, and they know the ins and outs of their trading system. They know what their win rate is and what the average R is, and because of that, they know exactly what the maximum amount of risk and leverage they can use to still keep some of that profitability in the system. Now, what I mean by this is when you see people on Twitter post P&Ls of, I went from this to that in 4 months, right? Which seems incredible to new traders, but you have to understand that the people who do this, it's possible because they have been working for years to develop a system. It's not possible for a new trader to come into the market and turn 1K to 100K. It's almost certainly impossible to do that without having to really work your ass off for years to be able to develop a system like that. If you're going to be actively trading, you can just go all in on an altcoin and it goes 100x and you're at 100K, right? It's definitely a possibility, but that's not trading. That's investing with a little bit of luck.
And buying a lottery ticket, actually.
Yeah. So you, as a new trader, you will not be able to turn 1K to 100K. Let's be realistic. You will have to work your ass off for many numbers of years before you can pull that off. And by that time, you most likely have a lot of money already. But we have to be realistic. And as a new trader, nothing worth doing is easy, and trading is definitely, when you become profitable, it's the best feeling in the world. And when you can stop making a living trading, being your own boss and all that, it's incredible. But it requires a shit ton of effort. And if it were possible to make 1K, turn 1K into 100K easily in the beginning, well, we wouldn't really have trading as it is today. So keep that in mind. If you're watching this in a new trader, there's no shortcuts to being a good trader.
Okay. Before we go on, I want to remind you that you have to like and subscribe, of course, to keep up to date with our webinars and let us know you appreciate the content. We have a giveaway going on in the webinar. And also, if you have some questions, put them in the chat, because we will have some time later to discuss the questions from our live audience. Liz mentioned yesterday in the webinar that his biggest win this year was 22R. It would be interesting to hear the process behind the trade and how he updated the stop loss and TP targets, and how you turned that 1K into 100K, basically.
All right, so let's see if I can. I haven't really prepared for this question, so let's see if I can actually find the chart from when this trade happened.
Okay, I'm going to go to the next question, and you can look it up. Oh, well, the next question is drop your questions in the chat. Because so we will try to go through them.
I think I have. Yeah, all right. So let's see here. We have in September. Let me share my screen here, and I can can show you something. This is the Ethereum BTC chart, and if I remember correctly, I had a very, very big trade last year in September. Basically, what happened was I went in on, I think that right there. So it's all about keeping with your system and your strategy and letting the winners run, basically. I know that I had some Fibonacci levels on the chart as resistance. I think I used maybe this high up here to that low. And I was looking to trade this up to the 236, right? So I had a target in mind, which was a high time frame target for a swing trade, basically. So what I did was so we had the 236 right here. Maybe the fib was drawn, on other level. I can't really remember, but I know that we had a decent trade setting up here. If you look at the daily, right? So on the daily, we had the stochastics RSI below 20, about to maybe bottom out here, and we're hitting the daily 50 EMA, and it was around some type of support right here. So I thought that, all right, so if we have a proper bounce here, I do think it makes sense to see this trend continue to the upside, and I would love to see a test of that 0.236 right here. So what I did was I just got, lucky and was able to get an entry on the lower time frames. And I think it was like a break and retest of the daily 20 EMA when we had a, some type of break in market structure here. So if you go forward, you will probably see that we have a bullish break in market structure right here. And I entered in that area based on the 15-minute setup, and I just told myself that I am going to hold this until we hit this high time frame level up here. And the setup looked something like this, below that stop, and then up here. Right, so we have a break and retest of the area around the daily 20 EMA, and we are trading inside that daily trend, right? So if you go to the daily, you will see that this would have been, it's not loading for some reason, but on a daily, this would have been a great swing trade, right? This would have been a great swing trade where you have a round the bottom on the daily 50, stochastics bottoming out below 20. We now know that this would have been an awesome trade to create a higher high in this sequence of higher highs and high lows. And I took a gamble. Well, I guess it's not really a gamble, but almost, I guess. But I followed the system here to have a very, very tight entry. And I just told myself that I'm just going to let this run up to the new highs, and I actually did. So I did not take any profit on the way up. I just let this one run because I knew that if this were actually to become a winner, which it had a high probability of being, it would be probably my biggest winner this year, and I would make up for all my previous losses in maybe 2 months back. So if we play this forward, I'm pretty sure we hit an area close to that level. I'm not really sure if that was actually the take profit, and obviously this is not the entry that I took, but that's the profit target, right? All right, so I could probably have prepared this better, but that's the example of the trade that I took. And to the question where the process behind the trade, well, this is the interesting part. So let's say that this was actually a trade. I do have a tweet. I posted that today on the actual trade. But the whole thing here, and the important thing here, is that all I did was I combined a high time frame trade idea with a low time frame entry, and that's how I like to do my scalping. If I know that I'm trading inside an area where the higher time frame trade has been activated, I will try to snipe an entry but use the same take profit. And that was basically what I did on this trade. If you're a member of the Birb Nest, you can check out. I posted a link to the to that trade actually in the Nest Club, so you can check it out. But why I'm showing you guys this is because you need to trust the process, right? And really, if you have a winning system, if you have seen this work out many times in the past, it's important to let your winners run. And in this case, I think I did actually, keep moving my stop up with like every new swing high on or swing low on the hourly or something like that.
Okay. That's beautiful if you can catch a trade like that. That's like the optimal scenario. But even if you catch the 3R or 4R, that's already a good trade.
Yeah. Actually, I think I have the yeah. So here it is. That's actually the trade here. Let me show you. So you have this was actually the trade, right? And if you look at this screenshot right here, I don't have anything, everything on the chart, but this was based on the 50-minute. And basically what we have here is on the 1 hour, we were seeing, this scenario right here with stochastics RSI bottoming out on a break and retest on the hourly, lining up with, I think it was the daily 20 EMA. And I actually used 3 commas here on futures with a delayed stop loss. So I would actually have gotten stopped out on this if I did not have a delayed stop loss. But basically what I did here was I went long on the breakout of this range right here, and we started to form a support area above this range, and that's when I went long, and I would have gotten stopped out right here. But that level right there is the that fib right there. So what I did on this one is I kept moving my stop up with every new swing low here on the 50 minutes. I had my stop here, then I had my stop here, then I had my stop here, and then we hit TP shortly after. And this turned into be I think 22R trade.
Nice. Good to see that working, and also good example of how some tools can help you to stay in the market or plan your trades correctly.
Yeah.
I think we can go to some questions in the chat. I think this one is a good one. Altcoin trades get stopped out mostly because of the Bitcoin volatility. Any advice on that? I think one advice about stop loss placement we already discussed. Like I personally solved that a little bit in this bull market, where I actually went long on altcoins I was interested in during that Bitcoin volatility, because especially when Bitcoin is volatile, these alts give some wicks, give some deviations below some levels, but I'm still interested in them, and they still might be trending. So it is a little bit maybe riskier at some stages, but it gave me a lot of optimal entries. And of course, we talked about widening your stop losses a little bit, entering at a different level, and this is an example of that. How do you solve this?
Well, it got much easier when I really understood that you really have to have to look at Bitcoin and what Bitcoin is actually doing. So if you're trading altcoins versus USDT, you should probably not go long if Bitcoin is looking bearish at resistance, because if Bitcoin gets reacted at resistance, most likely the altcoins versus USDT will move down with Bitcoin. So always have keep your eyes on Bitcoin, and also just accept the fact that Bitcoin is going to make a move. And when it makes a move, if your altcoin position is close to the stop loss, you are going to get stopped out. You just need to accept that fact and factor that in when managing your position and your risk. So if you enter like too many altcoins at once and Bitcoin makes a move, you're going to get stopped out on all of them if it happens slightly after you've entered. So sure, you can use tighter stop loss, but I mean, if Bitcoin makes a move, it's going to be some pretty big moves on all coins. So I would say it's really a hard one. I think that it's the biggest obstacle for new traders in the crypto market to understand the relationship between altcoins and Bitcoin. So I don't really have a very good answer to that one. But keep your eyes on Bitcoin and do not long altcoins if Bitcoin is looking bearish at resistance, especially not versus USDT. And for me, what I do is I don't usually buy the dip after a major move to the downside. I wait for the dip to be bought and for some type of bullish market structure to be formed at lower timeframes, and then I enter. And that will, for me, that feels a bit safer.
It is, because like often on the first dip, everybody got shaken out and others like day traders go in, but often price retests that level. So if you miss that first dip, you could set some orders or indeed wait for that second bounce and then go in, which removes a little bit of that uncertainty if it's going down again or more, and gives you some confirmation that that level is really holding as support.
Yeah.
Short question is, where do they announce the giveaway winners? The giveaway winners will be emailed. But if we have the Twitter handles, we will also announce it on Twitter. Is it a good idea to put market order on stop loss? What is the risk of putting a market order? How do you handle your stop loss?
All right, so I always have a all right, so it depends on what portfolio I'm trading. If I'm trading the long-term portfolio, I don't have any stop losses. If I'm trading the swing trading portfolio, I might have a stop loss. But if it's a let's say the stop loss is maybe, somewhere between 15 and 20% below my entry, I'm going to have an alert at an invalidation area. And if I hit that alert and I then have a bearish market structure forming on the lower timeframes, I might just exit manually. But I will most of the time have a market stop loss at a certain level as a security measure. And when day trading, my day trading portfolio, I always use a stop market, especially when scalping, because if you don't have a stop, market stop loss, you might have a limit order. Well, if that limit order won't get filled, and I mean, you can get liquidated quite quickly when scalping without market orders.
Yeah, I think that's a big problem with, for example, Binance, who only has limit orders, and if you don't set them correctly, if price keeps dumping, you'll be stuck in a position because your limit order doesn't get filled. So I always advise to use a market stop loss, which creates probably some extra slippage and maybe some extra fees. But in the worst case scenarios that you always have to take into account, you don't get liquidated or you don't lose way too much if your limit doesn't get filled. So I think it's more, the question, in my opinion, should be more like, what's the risk of putting a limit stop loss order instead of a market order? Because
yeah, exactly, because having a market stop loss order, that should be the first option. That should be the basis. The basic stop order for a sell order should definitely be market stop loss. And like you said, having a limit order as a stop loss could be detrimental. I mean, you could turn a 1R loser into 10R, which is terrible, of course.
Yeah, agree. Let's see if there is. Oh, the question is for you. What is the most profitable market for you, crypto or forex?
ATM is in at the moment, right? I guess. Yeah.
Yeah, at the moment.
Well, it's hard not to be profitable in crypto right now. I mean, if you're holding Ethereum, you're gonna be quite profitable. If you're holding Bitcoin, you have been extremely profitable for like the last couple of months. But I would say that crypto is more profitable for me because I have a larger amount of capital in crypto. But the thing is, I'm very close to being in percentage wise more profitable with my day trading, and I'm actually doing the day trading in forex combined with Ethereum, Bitcoin, and Litecoin. So I guess if you look at the forex trading percentage wise, if it weren't for this massive bull market in crypto, I would definitely be more profitable in forex. And that's why I like trading forex, because I know that when crypto turns bearish, the same market conditions are most likely going to be visible in the forex market. So hopefully my percentage win rate and all that will be the same even when crypto turns bearish. But it's hard not to be profitable in crypto, so obviously it's going to be crypto.
Nice answer. Last question. How about you guys helping with live trades for short time frames? We can use your experience for better win rates. I think this is more a question of strategy development. Like what I often do with my mentor students is that we go through a process of developing strategies that are back tested and have, or either good win rates or a good RR. And by going through that process and finding good combinations of indicators, good setups, and doing some trade selection, you can get that better win rate. So I think this question isn't purely for short time frames, because it's basically strategy development. And if you don't know strategy development, you can't do it on short time frames, but also not on high time frames. For me, that process is always the same. And I think we talked about this before, but I guess that would also be the same for you.
Yeah, I mean, well, first of all, what I'd like to say is, short time frame, high time frame doesn't matter. Like you said, market structure is market structure, right? And highs and lows and horizontal levels, it's going to be visible on all time frames. What I do, however, recommend is like when working on a system that you're talking about, you should probably start at the high time frames, try to be profitable on the higher time frames, because it's moving slowly or slower, and then you can zoom into the lower time frames to see if it's working the same on the lower time frames. But yeah, I mean, it's not really going to help you guys to see. I mean, in my webinars, I do a lot of live trading, and sometimes I do a lot of live trading on the lower time frames, but it's not going to increase your win rate to see me trade. I mean, it really makes no sense, because if I give you a setup and you take it, if that's not part of your system, it's not going to help your win rate. All right. So you have to develop a system, work out your own win rate. And the only way to increase that win rate is to stop doing the mistakes that you're doing and increase the number of good things you're doing. And by developing that system. What I do with my private students, like you said, what I do is I take my system that I'm doing, and I try to teach them my system, and I tell them only take from me what makes sense, right? I gave them the basics, and they should only take whatever makes sense. And if they have something that they like doing, or an indicator that they really like using, add that to the strategy, but only if it works, only if it increases the win rate, only if it increases the average risk to reward or the win rate. So you can see your slide trade, but you should only take inspiration and motivation for that. You're never going to be profitable just copying other traders in the long run.
Yeah, and what we can help is, of course, if you have a strategy, we can help you with that. If you, put it in the chats or go with this through that strategy development and private mentoring, for example. So I think that ends the webinar. We're 1 hour in, and the next one is starting. But before we go, I want to thank Lips for joining me on this webinar, and also for our viewers, make sure you sign up for the Congress so you still get that free access to the Discord. And also because we're having some discount codes for our products there. And after the Congress, the products will be more expensive. And with this discount, you can save a lot on our services. So make sure you sign up and keep an eye on the website. Thank you all for watching, and see you at the next webinars.
Thank you, guys.